The Fed is really, I would say, in a tough spot right now. United States economy has sticky inflation. I have to say this is actually unprecedented. We have the S&P 500 sitting at all-time highs. We have US home prices also at all-time highs. We have Bitcoin at all-time high. We have gold at all-time high. This drop in Bitcoin dominance gave some room to alts to breathe so they can recover, let's say recover and at times or selectively even outperform. There are hundreds of different crypto indices already available, but none of them have this methodology that we have. It is a mixture of quantitative and qualitative performance metrics packaged in a novel way that is not to be found out there.
Hello and welcome to the first edition of Crypto Insights provided to you by Venionaire Capital, the entrepreneurial partner for venture capital and private equity. Today with me I have Igor, our investment director and tech lead of the Web3 fund. Hello, Igor.
Hi guys. Hi Philip. Thank you for having me.
We're recording this just ahead of tomorrow's Fed meeting. This is very interesting and very exciting on September 17th. And there's a lot to unpack across traditional markets and crypto. So let's start with the elephant in the room. The market is pricing in rate cuts and with over 95% probability for at least 25 basis points. So what's your read on the current macro setup?
The Fed is really, I would say, in a tough spot right now. United States economy has sticky inflation. Yesterday's nowcast readings from the Cleveland Fed Center for Inflation Research, as it's called, showed that inflation is moving in the wrong direction, namely up. So simultaneously, we just had the largest annual job benchmark revision on record. So 2 million jobs from the last 3 years of Biden administration have been revised away, meaning the economy has slowed more than everybody thought. So this means this job destruction has grown beyond that what initial data showed. So the Fed has, I would say, two conflicting signals right now. It means that they need high rates or to keep high rates in order to fight inflation, to bring the inflation down to target 2%. But at the same time, if they do not change that and keep the inflation, the Fed rates high, that would further destroy employment, meaning it would further hurt the economy, which is certainly not what they are after. They're trying to avoid that because the Fed has two mandates, as they say, maximum employment and inflation targeted at 2%, which is at the moment a tough spot for them.
Yeah, I believe so. So that's a very challenging position, so to say. How are you thinking about the market reaction then, especially given we're at all-time highs across multiple asset classes?
I have to say this is actually unprecedented because we have the S&P 500 as representative of U.S. equities, U.S. economy, sitting at all-time highs. We have U.S. home prices also at all-time highs. We have Bitcoin at all-time high. We have gold at all-time high. We have global liquidity also at all-time highs. So in addition, U.S. public debt is also at all-time highs, over 37.4 billion, which is really the highest on record so far. So the labor market is clearly in a recession. Now it's clear, it's factual. And according to Bloomberg, U.S. equity valuations from with the August readings reached their highest level on record as well, meaning the price to book ratio has surpassed both the .com era or the .com bubble and the, I think, 1929 peaks just before the Great Depression happened. So there's this other thing that, since 1980s, 100% of Fed rate cuts that had at the same time S&P 500 at its peak have led to more record highs in the following 12 months. So it is very, very, it is just unprecedented situation, as I mentioned.
Okay, well, so we're in a situation that has never been here before.
Exactly.
Let's dive into Bitcoin analysis. So it's been relatively quiet since July, consolidating around these high levels. So how are you interpreting this price action?
I mean, Bitcoin's consolidation is actually somewhat in line with historically range-bound third quarter or Q3 patterns. This is typically followed by strong rallies that we get mid and towards end of the Q4. From a structural perspective or on higher time frames, Bitcoin needs to hold 110 between 10 and 112,000 area. In the near term, we need to see 16.5, 117,000 US dollar as a level reclaimed and held for any movement toward the latest all-time high, which was around 124,000 that we printed just a month ago, back in August. So if we break 122, roughly 121, 22,000, then the chances are good that we are going to go for 140, 150K area, which is a reasonable target if we get strong momentum once we break that 121, 22K level.
Well, the institutional flows have been impressive.
Yes.
Can you walk us through the current ETF and corporate adoption picture?
Yes, this trend is picking up pace over the last 6-7 months. The new or the net inflows from DATs, digital asset treasuries, and corporate treasuries and ETFs all together are, factually still very, very strong. Just Bitcoin spot ETFs are at, I think, 23.78 billion year to date. And the last week alone, we saw for Bitcoin 2.4 billion in a net inflows, which is the largest since July, if I'm not mistaken. So what's really exciting is still thinking about in-kind ETFs. We still don't have spot ETFs, spot Bitcoin ETFs in the United States that offer in-kind redemption and subscription. This SEC still requires cash-only transactions. So, having in-kind ETFs would dramatically increase capital inflows, capital efficiency, and it would, I think, attract more institutional investment because you would be able to transfer BTC or Bitcoin as a proper digital asset, not just some paper, let's say, cash value. And combined with Bitcoin's decreasing volatility, as we have seen this year, I think this really reinforces Bitcoin maturing as an asset. So funds and public companies alone hold over 12% of BTC general circulation. And that excludes any private or retail holdings. So in sum, if we get in-kind ETFs in the United States, it would actually increase the capital efficiency and it would attract more capital inflows than we have right now, which is already at high levels.
Okay. As we have observed, Bitcoin dominance has dropped significantly.
Yes.
So down to 55 to 57% from 66% at the end of June. So what does this rotation tell us?
Well, this drop in Bitcoin dominance gave some room to alts to breathe so they can recover and at times or selectively even outperform during the months of August and September, which are, as I've mentioned, typically weak months for Bitcoin, except in post-halving years. And 2025 is this post-halving year. So, we cannot talk about Bitcoin price without addressing gold and what's happening with gold prices. Gold broke out in the third week of August, if I'm not mistaken, and it has shown very strong bullish momentum price so far. I mean, yesterday it printed a new all-time high around, I think, 3,690 or so. And that's over 40% year-to-date increase, which is a very, very strong price performance.
Yeah.
Well, this is usually not good for Bitcoin in the short term because gold and Bitcoin rarely move in the same direction simultaneously. Usually when gold moves and rallies, Bitcoin goes down or does nothing. And when once gold consolidates or even retraces, then Bitcoin rallies and plays catch up very, very fast, doing so, meaning it rallies very, very fast. So in this case, we need to also keep an eye what gold does when we talk about Bitcoin dominance or Bitcoin price, even though Bitcoin dominance has declined substantially down to 57, 58% today, if I'm not mistaken, which is then a positive indicator for alts doing much better.
So once gold momentum slows, you expect benefits for Bitcoin?
Exactly. Yes. Once gold slows down and money flows then change direction toward risk-on assets, this would translate to also Bitcoin doing much, much better.
Okay, let's switch to Ethereum and altcoin trends. So Ethereum has been interesting since its August highs. The ETF numbers continue to be strong,
yes,
despite some consolidation.
Yes.
So what is your current view on this?
I mean, Ethereum has largely consolidated since its strong August rally and printing all new all-time highs just like almost a month ago, mid August. Now we have a mixed signals. You have signals that indicate pausing in the trend, continuation in the trend, or a reversal. So it's a kind of like a mixed bag at the moment. But nevertheless, the ETF numbers are very, very, very good. I would say even incredible. Year to date, we have around 11.8 billion, almost, let's say, 12 billion year to date net inflows, which is already higher than the entire 2024, last year. So this is a clearly strong appetite for Ether accumulation. We have also staking Ether ETFs in the United States that I think are around the corner. So we have money coming in and not money coming out, which is bullish, despite Ether sitting just below its new all-time high. And in addition, this staking component for ETFs in the United States is very interesting, especially for large investors or institutionals, because it does not only give them the exposure to Ether as a digital asset, it also gives them additional source of yield just for holding that asset, which is not the case when you talk about Bitcoin ETFs. You have Bitcoin, you have exposure to Bitcoin, you hold Bitcoin, okay. But in the case of Ether, you have additional yield on your holdings. So it means extra, let's say, revenue, quote unquote, which is certainly a very, very interesting aspect for institutional investors.
Definitely. From the technical and ecosystem perspective, how do you view Ethereum's institutional positioning?
Well, you have to mention, when talking about that, you have to mention Ethereum's zero downtime track record over the past 10 years. I mean, the 10th anniversary in August really matters for institutions. This is a technical achievement, I would say, par excellence. When you're managing large allocations, uptime and reliability and fundamental requirements are not nice to have. They become must haves. You really have to have that. So plus inflows, net capital inflows can now move Ether price more easily than it's the case with Bitcoin, because Ethereum's market cap is around roughly 1/5 of Bitcoin's. So the same dollar amount or capital amount of inflows is going to have more pronounced impact on the Ether price as it would be case with Bitcoin, because Bitcoin has much deeper market liquidity, market depth.
Okay. We've also seen some interesting developments in other layer ones recently. Can you break down what's happening there with Solana and Avalanche?
Yeah, that is an interesting development. I mean, since start of September, Solana has outperformed both Bitcoin and Ethereum, gaining a relative plus 22% at its peak, and around 60% since start of August. So the driver has been DAT companies and opening of institutional investment rails by Franklin Templeton. So the latest purchase of over the last week was by a single DAT company that bought around $1.65 billion worth of Solana. So cumulatively, you have already well over 3 billion allocated to Solana so far by DAT companies. And you have further announcements and commitments of additional DAT companies that are just popping up left and right, which is an indication that this trend of specifically Solana accumulation is going to pick up pace. So Solana's ecosystem growth is also supported by newly minted stable coins on the Solana network by, for example, Circle's USDC or Tether's USDT, which also helps with ecosystem growth and valuation and further attracting additional capital. AVAX, as another layer one, has performed also very well over the past week specifically, pushing over, I think, 30% months to date so far. So again, announced DATs and committed funds are the driving force also in the case of Avalanche, as similar to Solana. So we saw the same pattern earlier with Bitcoin and Ethereum, or more recently with Ethereum, especially in this year. So DATs are strongly pushing prices higher. Both Bitcoin and Ether printed new all-time highs last month. And I'm repeating that in order to indicate that this, let's say, pattern of performance, of good price performance, is in the pipeline for Solana, Avalanche, and other layer ones.
Okay, so this seems to be a trend with these digital asset treasury companies. So how should investors now think about this?
I'm mentioning these, as I've said, as indicators of a growing trend. So, digital asset companies that are including prominent coins in their balance sheets, that are raising money to accumulate more, it is clearly picking up pace. So it helps you also to anticipate which assets will get momentum and money inflows next. So which of the assets or projects are highly likely to get this attention, which ones are the next in line, so to speaking. So based on where liquidity flows, you have to consider which crypto assets will have then easier time to attract and further attract capital inflows, and hence deliver, let's say, outstanding performance. So meaning doubling or tripling from where they stand now. The further down the market cap list you go, the more, I would say, the more difficult it gets to pick good allocations or to find good, decent investment candidates, because the risk increases. The further down the list, the market cap list you go, this risk is just increasing. So just as a reminder, I'm talking about this in the context of high capital inflows that are likely, but nothing is guaranteed. So speaking of layer one performance and institutional adoption, this is actually something that we have been thinking about in our team here at Venionaire. And we recently launched VIDA, which is the Venionaire Index for digital assets, with our very first index called VLONE, stands for Venionaire Layer 1 projects or assets. So this index specifically focuses on Layer 1 blockchains. And VIDA and VL1 are both compliant with EU's BMR or benchmark regulation, which is very important aspect for any institutional investor. So the timing feels right, I would say, because we are seeing this shift from, let's say, speculative trading toward a more systemic benchmark-driven exposure to digital assets that are done in a compliant way.
That's interesting timing with all of the DAT activity. So how does having a structured benchmark change the investment approach here?
Well, yeah, exactly. How does it do? I mean, instead of just looking at market cap rankings, like I've mentioned, top 10, top 5, top 15, whatever, and the list of market cap ordered projects or companies is very long. So the further down you go, the less market cap exposure or size you have. So instead of just focusing on this one specific metric, market cap, our methodology with VL1 considers factors like liquidity, performance, technology innovation, and network performance of an underlying L1. And of course, other stuff like team governance quality, user adoption, DApp ecosystem in general, and other growth metrics. So it is a mixture of quantitative and qualitative performance metrics packaged in a novel way that is not to be found out there. There are hundreds of different crypto indices that already available, but none of them have this methodology that we have, and the majority focuses only on market cap as a starting point. So it's about bringing the same institutional rigor to crypto that we are accustomed to in traditional markets with indices like S&P 500 or NASDAQ. So I think for institutions, benchmarks are not something that is optional. They are, I would say, prerequisite for building compliant financial products and for giving investors the clarity that they need.
Okay. So now also from my side, congratulations again on the VIDA launch. That has been a very, very exciting project. And I know you've put in a lot of work for that.
Yes. Myself, me and my team, we have worked over the past few months. It was a very challenging period, and we are very, very proud. I am very proud for what we have accomplished so far as our first milestone, together with our partners, Compass Financial Technologies. Shout out to them. Thank you, guys. Your team is just awesome. Great. Thank you. So, as I've mentioned, this is the very first milestone, and we have other sector-specific indices in the pipeline that are going to be focused on other subsectors of the crypto industry, such as, for example, DeFi or real-world assets, AI, DeepIn. There are in total 12 planned indices, and VL1 for Layer 1 solutions is the very first one.
Yes. So, as I said, very exciting launch. So there's more to come.
Indeed.
Now, switching to the regulatory outlook. So, speaking of upcoming catalysts, there are several ETF decisions pending in October. What's on your radar as the investment?
We are nearing the final decisions or final deadlines for the SEC decisions. on quite a few ETFs that are set for October. There are also a few up until the end of the year, but the majority have their final deadline in October, such as Solana, Litecoin, Ripple, to mention just a few. So while the, let's say, accumulation of Ether and Bitcoin by DAT companies is at the moment maybe taking a break. It has slowed down, but nothing that is, it's not a complete standstill. Other majors are, I would say, just getting started. So the SEC has the option to reveal decision at any time, but is obligated to do so by their final decision deadline. So not just theoretically, but literally, they can announce their approval or rejection today before the final deadline. The SEC delayed its decision on staked Ether ETFs. I think it happened last week. But despite this, Ether ETFs saw their largest inflows since start of September, which those inflows I'm talking about happened on last Friday after this delay decision about delaying staked Ether ETFs. So the point I'm trying to make is that any current delays by the SEC are not perceived as outright rejections, especially for layer one majors, which our VLONE is focusing on.
So giving all these moving pieces, how are you positioning?
Well, generally altcoins have, I would say, performed decently, while Bitcoin consolidated since its September low around 107,000K. And many mid caps are still in their multi-month consolidations, but they are technically looking ready to move higher. So the altcoin market cap sits at 1.7375 trillion roughly, which is the highest in the last 90 days. So if you take a look at some, let's say, altcoin index indicators, they are already saying, oh, we have altcoin season. It's already altcoin season. Yes and no. So that has to be taken with a grain of, taken with a grain of salt, as they say. So should Bitcoin push really toward that pivotal $121,000 area, I think that altcoins would likely get their further boost, which would align with this historical Q4 strength that we often see, that starts oftentimes early October, mid-October, and then carries on until the year's end.
Okay, looking into the market with tomorrow's Fed meeting in mind and Q4 approaching, what should investors now be watching?
Yes, we have a big macro event tomorrow that will likely or maybe almost certainly move and impact markets. We are definitely expecting some increased volatility. But currently, it is hard to be bearish in any way when it comes to broader trend. US equities are still strong, still hold strong, as I mentioned. And as long as the US dollar stays weak, as long as it stays below 99 roughly, now it's at 97, the USD denominated assets should continue moving higher, including crypto, because weak US dollar is favorable for risk on assets, especially for crypto, more so than not.
Okay, so any final thoughts now?
To summarize it, maybe keep an eye, keep an eye on Bitcoin and Ethereum dominance levels. What happens there? Are there any significant changes or early signs? And keep an eye on whether we get further strength into altcoins specifically. They're recovering, and maybe further movement to the upside, as we've seen in November last year. I would also watch for institutional adoption through ETFs and net inflows, especially, but also news about any accumulation by corporate treasuries or DATs. I mean that for other major for other major projects out there as part of altcoin basket. I mean, definitely, of course, monitor the gold situation as well. As mentioned, it is of high relevance. Overall, I think Q4 is going to be really strong for crypto markets. Longer term, the fundamentals remain strong because we have this regulatory clarity and support and institutional infrastructure that is continuing to be built out.
Thank you, Igor. Excellent insights as always. This is no investment advice, of course.
Of course.
We'll be watching tomorrow's Fed decision closely, and we'll be back with another update soon. Thank you guys for watching, and we'll see you guys in the next episode of Crypto Insights.
See you guys the next time around. Bye-bye.